This episode is sponsored by SmartVestor. Connect with an investing pro for free at RamseySolutions.com/invest. You're listening to Ramsey Everyday Millionaires, where we talk investing, retirement, building wealth, and outrageous generosity.
Jeremy's with us. Jeremy is in Tucson, Arizona. Hi, Jeremy. Welcome to the Ramsey Show.
Thank you. Thank you for taking my call.
Sure. How can we help?
So, quick question. My youngest son, got himself stuck into a whole life policy. And, of course, I want to talk him out of it, get him to invest in something else. Mm-hmm. So I know the biggest hook is he can borrow against his policy. Mm-hmm. I know that with the 401k, you'll get penalized, mm-hmm. which leads me to maybe mutual funds, which I don't know a whole lot about. Mm-hmm. So I was wondering, what's the major difference between the 401k and a mutual fund that he may be able to borrow against in the future?
Okay. How old is your son?
He's 23.
Okay. All right. Well, I don't think. I mean, number one, let's just ask the question: why is he going to listen to you?
Well, I've had really good relationship with him, and the whole reason he got himself stuck in here was because I kept pushing for to invest, to save money, to think about his future. But
then he picked a bad way of doing it.
Right.
And when you say, son, this is a dumb way of doing it, it's not a good investment program, what does he say? Oh, I can borrow against it?
That's his big hook, yes.
Okay. Well, no one ever got rich borrowing their investments.
Right.
They invest them and they forget them.
Completely against it.
Yeah, borrowing against it is not a method of wealth building. That's a method of selling insurance, crappy insurance, but it's not a method of wealth building.
Right, and that's what got him in. He was actually looking for health and disability and death insurance is where he started looking, and then they hooked him on the whole life policy. Yeah.
So, I mean, my point is that we can answer your question. A 401k is not an investment. It is how an investment is treated for taxes. Typically, inside of a 401k, you're going to find mutual funds. So you have a mutual fund that's either covered with a coat keeping it warm from taxes, and the coat is called a 401k or an IRA or a Roth IRA, or it has no coat and it's out in the cold and has taxed. But in both cases, it's still a mutual fund. Could be the exact same mutual fund. And but wealthy people don't build their investments in order to borrow against them. And so if he wants to become wealthy, he's picked a really bad way of doing it. Number one, borrowing against it. Number two, he's picked probably one of the worst financial products alive today, and it is the whole life policy, because it has a horrible rate of return. In the first 3 years that you pay 20x, 20 times more for the same amount of life insurance. So you buy a $100,000 whole life policy, you buy a $100,000 term policy. If the $100,000 whole life policy is $100 a month, the $100,000 term policy is $5 a month. That's what research tells us. So it's 20 times more expensive. $95 extra per 100. Okay? Now, where does that go? It goes into an investment called cash value. And so the cash value has no buildup for the first 2 to 3 years. They keep 100% of your investment as commissions the first 3 years. You have zeros on your cash value buildup the first 3 years. Well, that sucks. And once you get past having a really front-loaded, horrible commission off the front end and it finally starts making money, the average whole life policy, according to research, averages 1.2% rate of return. Not going to get rich on that either. Oh, and then when you finally get past all of that, if you actually build it up, you can borrow and pay them interest to use your money. So if you have a savings account and you want to borrow, and you want to take money out of your savings account, you don't have to pay money. You just take money out of your savings account. But with a whole life policy, you want to take money out, you have to pay them interest to use your money that you paid 20 times more to build up. This thing sucks. Oh, and it's even worse than that. You finally build up inside your whole $100,000 policy, $20,000 worth of cash value, and then you screw around and die, which we all do. Oh, guess what happens to your $20,000 that you paid $95 extra per month to build up after getting past horrible rates of return and no build up at all for the first 3 years because they kept it all as a commission. Once you finally get $20,000 in there and you die, they pay $100,000. They keep your savings account. So if you had a savings account at the bank, or if I started pitching you a savings account on TikTok and I said, hey, here's your savings account. The first 3 years you put money in, nothing happens. We keep it all. After that, it makes 1.2%. And when you die, you lose your money. No one would put money in that. That's a whole life policy. So nobody ought to put money in a whole life policy. So you can just play this rant back for your son, Jeremy, when it comes out on the podcast, and it'll answer his question.
Perfect. It's exactly what I would do. And I'm not even, I mean, that's exactly, son, watch this.
Yeah, this is just, don't do it. Don't do it. You got, son of Jeremy, you have been screwed by the life insurance industry, and they are very good at their business of screwing people. It's unbelievable. Horrible product. Let me tell you, if you're poor, the way they get you is the pawn shops. The way they get you is the rent to own. The way they get you is the payday lender. The way they get you is lottery tickets. If you're middle class, the way they get you is they make you believe you're going to get rich on airline miles using your stupid credit card. Well, that's a dumb butt idea. The way they get you is they get you into a whole life policy. That's a dumb butt idea. The way they get you is they go, sophisticated rich people lease their cars. No, they don't. No, they don't. It's a dumb butt middle class thing to do. So the whole life policy is the payday lender of the middle class. It's a signal that you intend to be in the middle class and stay there the rest of your life because you got screwed by the insurance companies. And I got to tell you, man, if you don't like that and you sell whole life, you need to actually learn how your product works. And then if you have integrity, you'll quit selling that crap. Because there's only two types of people that sell whole life, the ones that don't understand it and the ones that are crooks. Because if you understand that crap and you sell it, you by definition are a crook. Because anybody that would sell someone an investment that the insurance company keeps their money that they put in there upon death and call that a good deal is a crook. That's just bull, okay? It's just absolute scam stuff. It just pisses me off. And I'll tell you what, whole life, I thought it had just about gone away. And freaking TikTok has revived whole life. TikTok, of all things.
Yeah.
I mean, listen, people, if your social media sounds like a tic-tac, you know, there's only one thing you should listen to on TikTok, and that's stuff we put out. But other than that, it's awful. It's a barren landscape of morons.
Oh, that's great.
It's crazy. Absolute nuts. Oh, God. And the whole life stuff is all over it, like they just invented it yesterday.
Yeah.
It's the oldest financial product. Man, the financial planning community completely abandoned this garbage 35 years ago. No one sells whole life insurance except life insurance agents. No one in the financial planning community believes in it. We've all been looking at it going, you gotta be kidding, for decades. And now that stuff comes back on TikTok. It's unbelievable. Wow.
I got a new idea out of this rant, a new sponsor, blood pressure medicine for Dave when he goes off on whole life.
Jeez,
this is fantastic.
Man. Can't stand those people. It's unbelievable.
I think you made that abundantly clear.
Thanks for tuning in to Ramsey Everyday Millionaires. To learn more about investing, visit RamseySolutions.com/investing or click the link in the show notes. Ramsey Solutions is a paid non-client promoter of participating pros. Learn more at RamseySolutions.com/SmartVestor.